Welcome to CX Talks here at TDCX Singapore. Today we are proud to present to you CX Talks Fintech Fireside Chat, an intimate gathering with leaders in the fintech industry. Today's big question: how should fintech companies prepare for the next phase of growth in an increasingly volatile economy? To discuss this and more, we have Anton, Dreyer, APAC Head of Partnerships and Strategies from Stripe. We also have Sophie, Wong, Point Carbon Zero Program Lead at Google Cloud Singapore. And ladies and gentlemen, here's your host, Lucas Turcomanis.
Thank you, Alex, for the intro and for setting us up. I'd like to welcome today's guests, Sophie and Anton. Guys, welcome.
Thank you for having us.
So recently, there's a lot of headlines. Fintech has been a hot topic. There's a lot about regulation, but we all know that regulation can be an enabler for growth as well as a consumer safeguard. With that in mind, what's top of mind for you, Anton, today with everything that's happening?
Sure. So firstly, I would like to acknowledge that there has been quite a lot of noise within kind of the financial service regulation space. But I'd like to take a more payment-centric view and especially drill down on the proliferation of real-time payment systems. So across the region, we see central banks enabled by the right regulation building domestic payment rails, such as Fast in Singapore, which essentially make payments faster and cheaper for consumers or businesses like ourselves. We really benefit from that underlying infra layer, and this enables sort of consumer surfaces like Pay Now, which is what you and I would engage with. So what's very exciting to me is that we're starting to see bilateral tie-ups. So between Singapore's MAS and Thailand's Bank of Thailand, we see prompt pay and Pay Now linkages. What this means for me as a consumer is I can go to Thailand and actually make an online payment to a merchant on a Thai island where there's not actually an ATM. I think this is really cool because it just shows how payments or regulation has enabled payments. Lastly, I want to share that I think a lot of coordination effort goes into sort of establishing these linkages. So central banks, regulators, and the industry has combined to create these seamless payment experiences. And this really could create sort of infinite possibilities for commerce within our region.
I think we all agree we would all like to be on a Thai island right now. But Sophie, I'd like to get your thoughts as well.
Sure. What I'll do is to start with a macro lens from an industry perspective. So recently, Google, together with Temasek as well as Bain, we launched the 6th edition of the Southeast Asia Economy Report that talks about the 10-year horizon growth or outlook of Southeast Asia's digital economy. And in this report, we talked about how traditional incumbent banks do enjoy a very strong ecosystem support because of the productive regulations that they already have or the incumbent integrated partnerships. But over the last few years, we have seen a very strong trajectory growth of pure fintech plays versus the very established financial institutions from a perspective of how they are able to have a stronger pace of innovations driven by a very fast-growing suite of financial products that they offer, as well as very, very dedicated specific platform. And what that means is really when we look at what's happening in the industry, I want to take that from a macro lens specific to Singapore as well. And with that, we see that the financial sector in Singapore actually makes up 14% of our GDP, as well as over the upcoming years, we see about 4 to 5% of growth per year, as well as about 4,000 jobs being added. And what that means for Singapore as an economy is the importance of how the financial sector is towards our economic ambitions. And how I see the regulatories playing a part is that they are core and central in being that facilitator, the ability to look at collaboration and bring together the different parties and stakeholders of the financial sector versus just pulling out the fintechs versus the financial established players. And what do I mean by that? I'll cite a recent example of the Singapore Fintech Festival that happened in November last month, and we saw about 62,000 attendees, 115 or more than 115 countries coming together, and this is all orchestrated by the Monetary Authority of Singapore. And that really talks about how the regulators are taking a front seat or that role in bringing together the public-private partnerships and being the orchestrator. I'll give another example as well of one of our blockchain startup companies that we work with, a financial blockchain platform. They are actually a joint venture between a global bank, a local bank, as well as a sovereign wealth fund. So when you ask about what's happening in the regulatory space or in the headlines that we are seeing a blend or that open ecosystem of partnerships, and how the regulators are being that core and central facilitator to encourage and build a thriving ecosystem for the financial sector.
So what you guys are saying is that a lot of noise around regulation, it's not necessarily about the quantity, it's more about the quality, but most importantly, it's the space and the collaboration between regulators and players in this industry. Great, so with that in mind, we have a lot of companies who are trying to break into new spaces, launch in new countries, or offer new technologies for their customers, whether it's Web3, whether it's NFTs, the tokenization of things. A lot of lessons learned there from companies that have failed. But in your view, and I want to start with you, Sophie, how do you think companies can best balance innovation, growth, and regulation?
Yeah, I think maybe to address your earlier point as well, when it comes to regulations, I don't see it as particularly a silver bullet in that sense, but really about how do we start with the end in mind when it comes to the financial sector or fintech or financial services. And I really love what Dr. Ravi Menon, who is the Managing Director of the Monetary Authority of Singapore, and I want to quote him of what he said at the Singapore Fintech Festival keynote. I quote, "Everything that we do in finance, technology, and fintech must have a larger purpose: to expand economic opportunity, enhance social inclusion, reduce risk, and protect the planet." And I really look from that perspective to your point, how do we balance innovation, growth, and regulation? It's really starting with the end in mind. Who are we trying to benefit here? The consumers, the national economic prosperity in that sense. At the same time, to your point, that we will definitely see new innovation every single day birthing forth. It will change the way that we operate, it will disrupt our businesses. And so agility is the key, and regulations should not impede that innovation, but have that balancing act to protect consumers. And so I do want to quote what MAS does as well. So MAS has a fintech sandbox for regulatory innovation, where they have a framework for experimenting of innovative financial products and services within a well-defined timeline, within a well-defined space and duration with regulatory support. And so that's an example, I would say, of how the regulatory in Singapore is looking at balancing innovation as well as regulation. Second, to your question on scaling new markets, on emerging technologies, I'll come from a Google perspective of how we are very, very privileged, of course, always to be in the forefront of technology. And Web3 is a new buzzword. You talk about NFTs, tokenization, and that is really where we see the next generation of Web 2.0. And for Google Cloud, we are in a vantage point or a very unique position of how we are able to look at transitioning or enable our clients to look at transitioning from the Web 2 to the Web 3 world. And really, it's the future of how do we enable the Web 3 ecosystems or even tokenized economies. And I'll give a couple of examples for that. So for example, BNB Chain is one of our partners that we work with, and we work together to look at the incubating or the growth of early Web3 as well as blockchain startups. And what does it mean by that partnership is that projects that are built on BNB Chain can access Google Cloud's infrastructure, look at, have the ability to analyze on-chain data as well as encrypt information on Google Cloud. And so another perspective from an off-chain point is that Google still continues in the Web 2 world to support and enable fintech and our enterprise customers or financial services with technologies, for example, like the open banking APIs, where that is so critical and important for our customers to reach their customers with new distribution channels, for example, looking at enhancing customer experiences with artificial intelligence. How do you look at data monetization, for example, as well as how do we enable our customers to look at the right regulatory or streamlining the right regulatory reporting requirements. So from that perspective on innovation, growth, and regulation, as well as scaling, those are my few points.
I love those points. Anton, you've had experience yourself, a lot of fast growth with Stripe. Tell us some of the lessons, and same question for you as Sophie.
Sure. So I think zooming in on market expansion and scaling in today's world for any sort of technology company, I think cost and complexity have been greatly reduced by companies who build sort of that infrastructure layer of technology. Stripe, for instance, handles all things related to payments and money movement, whereas Google Cloud enables infra. So each time a company expands or scales, they don't need to rethink about servers or storage. So if you really normalize technology providers, at their core, they are abstracting away the complexity of sort of a domain space. And I think very importantly, they also sort of handle like regulation. In a sort of a personal example, 6 years ago when I came to Singapore and I wanted to send money back to South Africa, I had to walk into a cross-border money transfer services offices to do KYC. So I took my physical papers and sort of gave it to them, and they sort of signed me up. At the time, I couldn't do it online or via their app. Whereas today, sort of enabled by regulation and a more digital-friendly environment, KYC infrastructure providers enable us to sort of seamlessly onboard to financial services. So if you think about from an infrastructure perspective, those KYC providers are doing the heavy lifting of abstracting away complexity. And I think leveraging a multitude of infrastructure enables businesses to really focus on what they're sort of best at. It really enables them to focus on building the best products and delighting consumers, and sort of players like Stripe and Google Cloud can really handle some of that other heavy lifting.
I love that you're saying companies can leverage existing providers, help them focus on what's core to their business so they can run, they can scale. Let me take the KYC example that you mentioned.
Yep.
KYC is usually a process that has a lot of friction, and it falls under the broader compliance umbrella when it comes to fintech. And we know how important things like KYC, AML, fraud detection, all of those things are. How do you think is best to balance the user experience across those necessary steps we need to take from a regulatory point of view?
Sure. So putting my consumer hat on as an avid user of all financial services, I think the onboarding experience is really important for a consumer and important for the sort of fintech apps such that there isn't drop-off as people are sort of coming on board. But I think it's very important to also balance that there's a lot of sort of compliance requirements on the financial service as they have requirements related to KYC, KYB, and AML. So creating unnecessary friction at time of onboarding, and an example which I experienced quite recently was having to hold up a piece of paper with my name on it, can really deter users from your app and drive them to a consumer. But for companies providing the service, it's really important to sort of balance that like good customer experience as well as with their own sort of obligations. And I think more generally in technology, we talk about garbage in and garbage out. So it's very important to ensure you collect the best information to provide an amazing customer experience, but also as a financial service, make sure you are doing your required due diligence. One thing I often think about is like the importance of localization. So when collecting sort of an ID document in Singapore, we refer to them as ICs, an NIRC or an FIN. And in Thailand, there's different terminology. So if when expanding to Thailand, you start asking about an IC, somebody might send you a photo of a cat. And sort of tying back to sort of my earlier point around infrastructure, I think there's a lot of efficiency gains and improved customer experiences on the onboarding part. I think these players really sort of abstract away the complexity of plugging into government databases to validate names, date of births, run ID images. And these are sort of enabling our financial services to kind of really focus on the core, say, money movement experience. And then I think even sort of lower or sort of underpinning all of this technology are cloud infrastructure players like Google Cloud.
You must have seen a lot of cat pictures in your day.
I have.
Sophie, same question. How do you balance the user experience?
So I'll come from a technology provider lens because we are looking at ensuring and enabling and protecting our customers' critical infrastructure because we are providing that technology infrastructure layer. And at Google, we are extremely paranoid about cybersecurity, about data, privacy, compliance, and trust. It is ingrained in our DNA. And what do I mean by that? A couple of tenets that we're focused on in our DNA makeup from that perspective is that we're constantly defending a global infrastructure. So imagine the scale of infrastructure that we manage. The same level of security that we deliver to Google ourselves is the same level of security that we deliver to our customers. The second part I wanted to call out is that from a Google network security and scalability perspective, from our data centers to network as well as application layer, we adopt and adhere to a zero trust architecture principle. And from that perspective, Google also operates in a shared fate mode or model, which means that we are very, very concerned, or we take an active stake in our customer security posture. So we're consistently investing in security technologies. Our most recent acquisition is with Mandiant, and they are a leading cybersecurity, cyber defense, threat intelligence, as well as an incident reporting services organization. And together with them, we are really looking at how can we protect our customers' security lifecycle at every single stage. I'll take a pause and ask the audience a question. Can anyone tell me what is the typical number of days that you would find out, or an organization would find out that they are in breach or they have been breached? So from the time an intruder enters to the time that they find out that they are breached, what's the number of days? Anyone? Any guesses?
1 day.
The global median average is 21 days. Imagine the amount of data loss that could have happened during that time. Imagine also the trust with your consumers, as well as the reputational loss. And so here at Google, together with Mandiant, our key focus and objective, to your point about delivering the right customer experience, is really to protect our customers. And that means providing them with the right tools, the analytics, the automation, taking a very proactive stand in their cybersecurity posture versus a reactive stand, but also providing the forensics, the right data reporting so that they are accountable to the regulators, to their stakeholders, to their end user consumers, or that even their supply chain and suppliers. And that's what we are looking at from a security perspective.
I love your point around having the backing of an established and reputable player to help you while you're growing with your core services. And I love the accountability, the reporting, and the data analytics. We know how important that is in today's world. I want to close off on a positive note. We've talked about regulation today. There's a lot of exciting things happening as well. What excites you the most about the future? Sophie, why don't you go ahead?
I'll start from that perspective of the different waves of the financial industry. And at Google, we have been in every single one of that wave. What do I mean by that? Wave 1 being your very established traditional enterprise banks. Wave 2, we see an emergence of your fintechs, your insurtechs, neobanks, digital banks. And now wave 3 is at this wave of Web3 fintechs that we see emerging. And moving from a centralized banking system to decentralized, or what we call DeFi in that sense. And Google has been in this journey with across all these 3 waves, enabling them in their digital journey. And from that lens, what I'm really excited about is in this third wave of the rise of these Web3 fintechs or DeFis, because it brings forth the promise of financial inclusion. It brings forth that perspective of how we can look at really serving the unbanked or the underserved, so that we can provide greater accessibility or financial accessibility and participation for many of the emerging markets. So for example, we have a agriculture or agri-tech platform, a customer that we work with called Agri8. And what their main objectives is, how do they look at unlocking capital for climate resilient farmers? The second thing that I'm really excited about, other than this new wave of Web3 and fintechs, is really the power and the evolution of technology that underpins really the entire digital economy or the building of the new financial network. And what do I mean by that? We see at Google really a lot of industry lines being blurred or converging. We have a customer who is traditionally an airlines company that used to sell air tickets, get you from destination A to B, but we're seeing a shift of how they are looking at expanding their business, where now they are providing a super app delivering services from deliveries, embedded finance from an insurance perspective, digital payments, e-wallets. And what really excites me with these two examples is that the future of the financial industry, or the future of fintech, is really the diversified players that is coming together to collaborate. Like I explained, that a airlines company is no longer just looking at air tickets, but is looking at embedded finance, for example, and how today we're all sitting here with Google, with Stripe, with TDCX, where TDCX looks at delivering the best customer service, the right skills, the resources, the knowledge. Stripe from a payment gateway perspective, Google from a cloud technologies and innovation. But it's so important how these different diversified players and ecosystem come together to collaborate. And that's what will drive the future of, I would say, the digital economy, the future of financial services, the future of cross-industry partnerships that will really help drive economic prosperity and, of course, sustainable businesses. And that's what I'm really excited about.
I love the diversity part. I love the inclusion and bringing these opportunities to underserved communities. Anton, what about you?
I think the thing that sort of really excites me the most is sort of the pace of innovation. So having sort of spent the last 6 years in Singapore, I was reflecting recently about how did I sort of engage and sort of operate with financial services 6 years ago versus today. So some very obvious examples. The first is we all used to carry around a DBS token where if we wanted to sort of authorize a payment or do something through the app, we had to sort of enter those 9 numbers. Previously, when you bought something online and there was a 3DS authentication required, you had to receive a text message as an OTP. Now everything happens seamlessly through your DBS app. It's on your iPhone or your Android smartphone, and everything is kind of a first-class technology experience. Another example, which I was referring to earlier, was around like sort of KYC. So previously you had to walk into an office. In other instances, you would sort of email your most sensitive personal information to a general email address. Whereas today, you just link your SingPass to an app, and all of your KYC information is kind of seamlessly transmitted, securely and seamlessly transmitted. And after a few seconds, you're already up and running, transacting. Sort of as a payments nerd, the thing I'm most excited about is how sort of common and easy peer-to-peer payments are. So 6 years ago, when you sort of went to have dinner with friends, you'd probably have to dish out cash to settle the bill at the end of the night. Today, you tap a few buttons and your friends have the exact dollar amount and you don't have to deal with change. One of the things I'm most excited about is also not having to carry coins around. I go to the hawker center and I buy my entire meal and just scan a QR code, and kind of the hawker is paid directly from my bank account. So while I think it's almost impossible to sort of project what the next 5 to 10 years would look like, I really believe at the current pace of innovation, the consumer experiences are going to keep improving. I think we'll have more choices in the ways in which we engage with financial services. And as consumers, we benefit the most because we will have more choice and a lot of better experiences.
A lot of great things to look forward to. Thank you so much, Anton. Thank you, Sophie, for coming today. It was a pleasure having you guys. Appreciate your thoughtful answers and the engaging conversation. Thank you.
Thank you
for having us.
All right, let's open up some questions to our audience. Yes.
Thank you, Sophie and Anton, for the very insightful discussion. So I think something that Sophie had mentioned earlier about having a larger purpose and the end in mind when you look at innovation, I think that is something that is very applicable to sustainability as well. And that's something that we all hear about today in today's day and age. That is something that companies really need to embrace. If not, they might get left behind. So what do you think are some 1 to 2 key things that companies should think about when they think about their own sustainability approach?
Thank you for that question. I know you asked me to give you 2 things organizations can do. I'll give you 3 instead, and I will start with their 3 C's: cloud, collaboration, as well as climate financing. So I would say that personally, I'm very passionate about sustainability as well myself, and you're absolutely right. This is very important for us today. And at Google, sustainability is core and central to everything that we do. We have been carbon neutral since 2007, and as well as by 2017, we actually match 100% of our electricity with renewable power. This is our most ambitious decade yet. By 2030, we aim to be totally carbon free. And we are on a sustainability mission to enable our clients to do exactly just that as well and enable their ESG goals. I would say that where can they start for organizations really is, number one, looking at greening of IT. What do I mean by that? An IDC recent report actually estimates that cloud computing could save 1 billion metric tons of CO2 emissions by 2024. And we know that many of our digital services could potentially be built on the cloud. And how we're working with many of our customers is that we have an internal saying at Google called "Start with Zero," meaning that as soon as you move your on-premise data workloads, for example, to Google Cloud, we can actually show you a trajectory of immediately how you can bring your carbon emissions down to zero, or your net operational carbon emissions of your carbon footprint in your data centers down to zero. And that's the greening of IT. Secondly, you can look at greening by IT. And this is an example of how we partner with Unilever, and they are one of our clients who are very much focused on looking at how can they ensure that traceability in their supply chain, or ensure supply chain traceability. And from that perspective, Unilever partnered with Google Earth Engine to put together satellite imagery to understand where are the areas of deforestation. Their prerogative is to ensure that their commodity sourcing has zero deforestation from that perspective. So whether they are sourcing for palm oil or for soybeans, they get the right data to make the right decisions from that perspective. The second part of C that I want to talk about is collaboration. Recently, in July this year, together with the Monetary Authority of Singapore, we launched Project Point Carbon Zero. And part of this project, we have a program pillar called the Climate Finance Accelerator. And we're so happy to have TDCX also come in to participate as one of the problem owners. And what we're looking to do is to facilitate and to incubate the scaling of green fintechs or ESG techs to come together to really look at how they can solve ESG challenges for the financial institutions or the real economy stakeholders from that perspective, to adopt those solutions to help them in their sustainable journey. And so we launched that just last month, and we're so glad to have TDCX with us. The third C that I want to talk about where organizations could look at is climate financing. And just a couple of facts and figures from your perspective. Global investments estimates in order for us to reach the Paris Agreement's temperature and adaptation goals is about $3 to $6 billion by 2050. To date, although there is a growth and we see in the private sector of investments about $300 billion a year, it's still not enough. Imagine the 3 to 6 billion target that we do have. But to give in perspective, the $300 billion is actually a very small share compared to $210 trillion of the AUM globally. And bringing these 3 points to your question, how can organizations get started? One is, of course, looking at the cloud from a sustainability perspective, looking at greening of your internal ITs, but as well as leveraging new and innovation solutions to look at sustainable operations for your organizations. 2 is collaboration. So thank you TDCX for joining us on this journey of looking at how we can solve ESG challenges with new innovation solutions. And last but not least is organizations can look at how they can mobilize and look at climate financing from that perspective of investing in sustainable projects. And that's what Project Point Carbon Zero aims to do, is really bringing together this ecosystem of partnerships so that we can move the needle when it comes to sustainability.
Thank you so much for that, Sophie. We have time for one more question. Yes.
So Anton, this would be a question following up on your earlier comment with regards to the pace of innovations. Within your perspective, what do you think are some of the initiatives or examples which can be within the private or the public sector or collaboration that you feel would drive the pace of innovations? This can be payments or in general tech ecosystem related.
Thank you for that question. So sort of taking a different path inspired by what Sophie just shared about collaboration. I think we associate innovation with big headlines such as this company raised $1 million or this X regulation enabled the next wave of fintech. But I really believe that in today's world, sort of collaboration and community are real drivers of innovation. So taking a few examples, Y Combinator is a very famous American sort of tech accelerator, but a lot of their superpower comes from building a community where the founders and the early stage startups have a group of people where they can build and test products on. In Stripe's own case, John and Patrick, our co-founders, built Stripe for other Y Combinator companies. They went to them, they said, what do you need from a payments perspective? And these really drove how Stripe thought about innovation. And having demanding users, the products that we see today, which kind of took Stripe to where it is, are what was defined at those very early stages as part of that YC community. Another amazing example, I think, closer to home in Singapore is Block 71, which is a sort of a startup space, which is a collaboration between NUS Enterprise and JTC. A lot of the startups who are homegrown in Singapore have sort of grown out of this space where things as simple as cheap rental, as well as having 20 or 30 other startups around you, just really help kind of build in those early days. And I really believe the continuation of sort of community spaces like this are going to create the next wave of Grabs, Shopbacks, or carousels.